Good morning, everyone. Hope you guys had a enjoyable weekend. Locked up. All right. Good morning. Good morning. All right. So, question: is this a sucker rally or a continuation to what started at the end of March? There, as you can see, we got this trading range pretty much going on here. So while futures are up here 92.5 points, Dow up almost 800. We got to move from support close to where resistance is. And we got different looks here. And one of the things I've been talking about in these pre-market updates is that the futures and the spiders, the S&P charts, provide a different look because of the 24-hour trading. Nonetheless, we look at them and look at them and see when do they agree or not. And so looking at the, let me just get my little drawing thing out here. This pattern here, we got a wide range bar moving up. You know, the internals were at way overcooked extreme here. And so now what we've got here is this consolidation that's creating support, possibly. And remember, it's still a trading range where it's support here and now it's up at the top of the range. And one of the things that I point out every single morning when we have these bars that look like, okay, here we go, one way or the other, is it's just the beginning of the day. We have no idea what this is going to look like. And so when we start looking at things on a bar by bar analysis basis, we have to say, well, this bar is not done. Let's wait till it's close to being done. So in other words, it's a daily chart. What might it look like at 3:30 going into the end of the day? And the same thing if you're looking at a 5-minute chart. Some traders hit the button, and there's 4 minutes and 52 seconds left to go. And, it started out quick and then it's completely different looking bar by the end. So now this does have the look of a bullish consolidation. And it popped up, right? It had this little breakdown failure right here. See, the bars are relatively equal at the lows there and had this topping tail reversal. And it's like, here we go down and, call it a gotcha trade, where it breaks down and reverses right back up again. Now, it didn't get that far, but, the media at the time was, oh, wow, 25% gain. You look at the chart, it's like, really? That's a 25% gain? Where you would think, oh my goodness, what an amazing move. But you put it in the context of how it went down and it's nothing. So the ideal scenario, and we've talked about that, is a retest pattern. And maybe that happens yet, maybe not, but it's getting a little long in the sideways action here to create the ideal type of a pattern. Meaning if it should go down, you've now got this block of trading overhead that tells us that institutions have been buying the dip with the belief that it's not going down there. Right? If they truly believed it, it would go down there because there wouldn't be a bid under the market holding it in this area. Now, doesn't mean it won't. It just means that the belief right here is that it's not going to happen just based on this type of price action. Now, there were lots of charts over the weekend that certainly looked like those individual stocks were going to go down, but that might change today. This is amidst a schizophrenic market continuing. And remember, not so long ago, the China deal and China taxes and tariffs, and the next day the negotiations are going well. And we had this kind of a market where every day it was like down the tubes, then rally back up again. And the next day the news would be the opposite. And maybe this is it. So over the weekend, it's like, oh, they kind of say, well, the next 2 weeks are going to be the worst of the worst, which leads to the top of the peak, right? That's what it sounds like they're trying to communicate here is that whatever happens in the next 2 weeks, which is going to be so terrible, this is the peak of it. And then it's going to roll over and things are going to get better. So don't worry. See if you make it through the next 2 weeks, but stay in the house, right? Wash your hands. So we'll see what this looks like at the end of the day. But as you can see, a nice big rally up into the top of the trading range. And as we always do now, question is, what does it do when it gets up here? Can it get deeper into the heavy lifting part? Does it fall back down? At this point, what was resistance, does it hold? Well, we'll see what bars form if we get a pattern like this. Right? If we start seeing this kind of price action here and it comes down, well, yes, let's be a buyer. Being a buyer, this may push up into here at the open. I don't know, right? But right now, we're looking at what we got. We got a bottoming tail bar, which it tried to dip down and buyers stepped up again. The mornings tend to be a little tricky and fast. So, we've got this congestion up there. Now, if it comes up here and comes down hard, well, 0 day to expiration, SPX call spreads are probably the way to go if there's premiums up here, right? But let's see how that shapes up after a little while. There's a little bit of room there. Let's auto scale that, bring it back down. So we're in the middle here. We're closer to the top. Well, we're not in the middle, closer to the top of the range than in, the middle of the range. Let's call it maybe down here, somewhere in here, just eyeballing it. But we had resistance, came down to support, went through it. You see the stall right there, the overlapping opens and closes. Yeah, I'm talking, Jason. Everybody hear me? I hope so. All right, cool. Thank you. All right. So as I said, this has that bullish look of a sideways consolidation after a sharp move up. Let's go to the spiders. And here you get a completely different picture, right? It was sideways and then a gap down. I mean, that's a bad tick, I believe. We can look at SSO. Yeah, that's more like it. We've got this sideways consolidation after a gap down. So now, where is it? 88 and change. Well, so it's gapping up close to this congestion, which I might say, well, here is a bullish island reversal, gap down and gap up. Maybe, right? It's up here. So, but it's the next resistance area is right there. It's not like there's a void above. There's a next congestion area there. But if it can hold this by the end of the day and chop sideways here or even get above it, well, yeah, here we've got this bullish pattern of a gap down, sideways, and a gap up. And that was a bearish pattern, no doubt. And I'm sure a lot were thinking, well, I was thinking, well, if it breaks, and this is what I wrote in the letter, if it can break that green bar's low, bombs away to the downside. I said, but if it gets above here, well, that's a whole nother story, that it's able to get above a red bar's high, after this gap down. And now that's the scenario that we have in front of us. And so with the next area of resistance is, what are you going to do now, buyers? Right? They're just saying we're coming to the peak. Right? Politicians are saying, okay, we're close here. We're not betting on politicians here telling us, the up and up on everything, and this thing changes and who the hell knows. Anyway, we're in this chop type of scenario and just looking at it technically. Yeah, this is a good start so far. If it can hold on to here, this move up looks like it could be a continuation pattern. However, it's got to get through here. And the idea, let's see if it can hang up there for a couple of days and let the sellers pound on it a little bit. And if they can't push it down, well, now we've got the potential for that continuation pattern. So not totally out of the woods here, but this gap up looks pretty encouraging. Let's just see what happens here. If this green bar can grow up into here and hold on and not turn into a topping tail. And Q's, good morning there on YouTube. Good morning, Germano. A deeper push, right? A bit of a deeper push into the congestion, but nonetheless, it's right there and backing off from it. So chopping around. We've got a void below. And so I guess now I have to change this to green. And there you go. This is where the resistance was, the support. Now, the ideal scenario in this type of a situation is that it doesn't get down here, right? That's how you really know that buyers mean business, that they've created this run up, which created this void, right? Directly underneath here, there's nothing. Meaning if you go beyond what's directly to the left, well, yeah, then you find what we call minor support. But in reality, there's little to nothing. These overlapping opens and closes, there's a little base there in a smaller time frame, which is, well, rather this right little congestion there, right there, right? So that's a little concept from MTS. An area of overlapping open and closes in a momentum move will be a small base in a smaller time frame. So if it pulls down here, this is the area where buyers will be. But ideally, in a situation like this, demand creates new support, meaning it doesn't pull back, it pivots and it creates a new support point. And that's the tell that institutions are still coming, and they don't believe it's coming down here to form the W. And as I said, this is getting pretty wide. That's not an ideal W pattern, right? The ideal W pattern goes up there, a couple of bars, back down, maybe 2 to 4, back down again. And so we'll see how it plays out. Russell, the Dow, I should say, it's been the weaker, same pattern, same story there. Getting closer to resistance, a little bit of room before it actually gets there. Russell, the weaker, more like your classic W, more or less. Doesn't always get down to the bottom. The ideal is it breaks the bottom and reverses, but sometimes they don't get quite down to the exact retest. This has cleared some resistance, and it's got a better shot to the upside. I don't think it'll go it alone, but one of the things that we've seen is that when things become a little sometimes questionable is that the Russell futures actually act pretty well and lead the way higher. And then the the S&Ps and the Qs and so on kind of play catch up. So it'll be interesting to see if this actually can continue to show some strength here. And that may be one of the tells as far as the market actually holding up here. And you can see while this led the way down, it held these lows down here, whereas this ESs came sideways and broke lower and then popped back up again. While they were, I guess, more so overcooked, and then popped back up. Oil coming in a bit here, but I'm off of the low here. Where talks of the president getting Putin and the Saudis to come talk to each other and play nice. We'll see where that goes, but so far that's a good sign. Bonds coming in a little. They've been at resistance. We've seen that over the last week. So coming down a little bit here. So bond prices coming down, which means that interest rates go up a bit. So that's another good sign. Gold is up here pretty good. And so they continue, while Whippy over there, they continue to just follow the theme of the longer time frame of the big breakout. And this is just the uncertainty of what's going on right now and this whip back and forth. But overall, the pattern still looks like it's going higher. Silver got smashed and it's recovered here. Maybe this actually could bring up the rear with gold here, whereas this little pullback and this turns into a little downside shakeout and moves up from there. And we always look at the transports, and same story. This pattern was everywhere. The gap down, the sideways move, almost looked like, mortgage the house, it's going down. And now we've got this gap up. So I imagine there's some serious pain going on out there with those that anticipated a lower Monday dropping. And with that up there like that, not a good sign or situation, I should say, for those that were short over the weekend. because with a pattern like this, which would be incredible, would be to see this come all the way back down to the lows today. But this is a Mr. Schizophrenic type of a market. So SPX levels. Dan's telling me we have a few open shorts. Well, so be it. Right? The patterns look like they were going to go lower, and now it's a problem. Dan will address that. SPX levels. I did cover that, Clint. So let's go to SPX and we can just look at those numbers. So down below here should be a no-brainer. And if there's premium down below here, since they're gapping up, well, we don't really get a clear signal here. But anyway, based on where the futures are, we know that they're up here. So down below here should be a good trade, safe. And go back to the futures, you know the level up here, but up above that level, but what we want to see for the call side would be for this to back off sharply. So with a credit spread, the further you can get, your strikes are further away from current prices, where the probability of getting to your strikes are as low as possible. That's what you're looking for. Now, we find patterns like that all the time, but it doesn't mean there's enough premium there to make it worthwhile. So that is what we're looking for. And so Paul is giving you 2,500, which means you got to get pretty damn close, and 2650 to 2660, which the call side is pretty attractive if we get a drop. So we got to get away from those strikes. And, you know, you've got pretty heavy lifting up here. So I'd like to see a little bit of a dip first. So there you have it. All yours, Dan. Blue's, how am I? I'm interested to learn from you. Well, you're in the right place, Blue. This is where a lot of people start on YouTube. They find us, and then they come over to the site. You can take a trial to the green room, and we can talk.
All right, good morning. Just adjusting this gap on our BXX. Now, yeah, markets definitely look lower, but as we said in the letters, the internals were more on the bullish side. We were hoping for a new swan dive to get our retest patterns. Charts. Yeah, I was updating BXX is why. So I'm just talking as I'm updating it. BXX. So that's why we had, excuse me, longs and shorts in the letters. All right, that's done. And we also gave a huge watch list of long and shorts. Here's a beauty, LB. I put it in our private Facebook group. But let's look through opens. In our weekly, we are flats, which is good. Where, you know, we aren't long or short. Let's look at our swing and options traders. So Amazon, it came close to our stop. We you know, I tell people I don't like ignore any trades. So we did get caught into that breakout last week, and then the gap down. We stopped out of a number of things, but this one held. So we have a covered call on Amazon. Clorox, we're long stock and short a put spread. CVS, we have a covered call. Nice gap up there. Diamonds, all right, we're short stock and short a put. That's called a covered put. We have our stop in place. We gave it a wide stop over this bar's high. And nothing to do. Let's just hope that resistance holds and we don't get stopped out. ENIA. We bought stock Friday. Nice gap up from a W bottom. So that's nice. Yeah, this week's MT Live, we're going to be talking about all these patterns, you know, W bottoms, V reversals, consolidation over time when they don't pull back, the something bar on retests. Lulu, we have a covered put, so that one's gapping against us too, but has a wall of resistance right there. Rost, we have a bear call credit spread over these highs, and we covered half on Friday, gapping up 78.50 or so. You know, that still has resistance. That one's fine. And then VXX, you heard me talking about. That's in our favor because we're short stock. That was a beautiful pattern. Beautiful consolidation over time. The headwinds that are caused from this. All right, that's it. That's all our opens. So you can see we're long and short. So the only ones that look like the biggest problem are the diamonds. That's it. Everything else looks okay. Let's look at some gappers. I told you I'm going to be looking at airlines here for the turn. You know, beat up, so many beat up sectors: airlines, restaurants, travel, cruise lines. So this is setting up for a possible double bottom. So now we need our potent reversal, and today might be the day. Gapping up to 1110. Let's maybe 30-minute high. Alex sent the news out, which I saw later, that Buffett was dumping 13 million shares of Southwest and Delta. And I can't, ridicule anything he does. And I'm sure he has very talented traders. But if you wanted out of these things, they're technicians. I don't know about that. They could have got out at much, much better places. And now you're getting out at a prior low? I don't know. I question that one. So LUV and Delta, this one came down sloppier with some overlapping bars. But I noticed that LUV turned green after gapping down $1.50 or so this morning. So that, in terms of a potent reversal, looking at pre-market data, this is shaping up. If this holds, I like it. EMU gapping up 21. Oh, big old gap way up here. So that sounds like bio and Corona related. Play had this one on our list for a possible turn here. It's a higher low, W bottom, but it's into the gap fill. And we were long this on the 1, 2, 3 down here at the lows. And we got I think 100% return on that swing trade. This one's holding very well pre-market. So that's going on my favorite list. W, little retail stock. So here's a good example of no retest, but bullish move off the low and consolidating through time. Now it's gapping too big, unfortunately. Look, all I do is mark it off, 60 right there. The gap's too big. That would be my target. My target would have been right where it is, right in the middle of this resistance, this support, this gap fill. So no play, unfortunately, but That was nice price action going sideways. This had a breakout failure last week, but now it's gapping over it. Another Corona kind of stock, but no target there. It's gapping resistance. USO oil. Craig looked at this, gapping down a little bit. You know, on the news of Saudi-Russian meeting being postponed, but this is a big move off the low, so it's another perfect candidate for a retest pattern. Love, we looked at VIR 3750. It looks like another Corona stock, biotech, but that looks good. That's a beautiful buy setup right there. 40% retracement, lower low, lower high bars. Wow, that's not bad right there. Look at that, reversing at minor support. That's worth watching. It's a bio. So for us, we would only day trade it. We don't like swinging. Bios, hey, John, Zoom, we had a nice bear call credit spread last week, gapping down again. It was in the journal talking about, you know, their security problems with the boom in the demand. And they were also talking on CNBC about this one, you know, being owned by 3 Chinese companies. That was news to me. IHG Hotel, I just noticed pre-marketed at a big percent gap, 38.42. We can do better, but Marriott, another beat up sector, Hyatt, Hilton. Exactly, Alex. That was my first thought. Oh, wonderful. Chinese involved. All right, this one, we were actually short. We had a beautiful swing short. And when I was reviewing it in the weekend video, I was like, wow, this is going to set up another W bottom maybe. But you know, it's interesting, you know, we got conflicting information on the weekly because it's a bull sandwich. So that's a bearish, it's a climactic, had a bounce, but then deep retracement. That's what this picture on the weekly tells me. But you know, let's see if it can turn. A tap, it's not a W bottom, but it's still a bottoming setup, kind of reverse heading shoulders. You have this new low and then a gap up and it's going sideways. So I like this one for a put spread. If we can get any juice. Yeah, with our checklist, and I made another note for both our letters that, look, it's not, there's plenty of compelling patterns for trading stocks and options. But the reason we're not giving as many option trades as you would imagine or hope in this environment is the spreads can just choke a horse. Amgen is on my list. I was going to give that as a put spread. It's a no-brainer put spread. And the out of the monies were 0 by 380. That's craziness. But I like this one as a long Amgen. Yeah, I got a big gap list. I mean, big interest list. So we'll go through them all here and winnow them down. But big gaps like this are hard to trade. This is kind of a bull flag consolidation, SEE. Another one where it builds support over time as opposed to retracing. And it has a price point above. So that's on the interest list. You see play here, bottom right, but I'm not chasing anything right here. Q's rolling a little bit. Yeah, Ross, that's a bullish gap. Yeah, we just have a call spread is all, so I'll give it a few minutes. Too bad this W is rallying too much. SSD, this was a sell setup, and I put a note that we'd be watching it on an intraday bounce. Oh, there you go. There's a beautiful gap and a consolidation. That looks great. So I'm going to get rid of W. And W's gone and OTEX. That's a good gap pattern. The only thing I don't like is the big gap in the market. If it's going to come in, then I'm not taking any longs. But this pattern I like. I like. Put spread idea and or maybe 10-minute high. Let's see. Esquera is asking about a bull put credit spread for UA. Let's take a look. Yeah, it's a retest pattern. It's a retest. I think our watch list is better because this one's definitely been lagging and it's still in a downtrend. So you'd be much better off if it can trade through this. So I would not trade it as a stock play. But if you can get juice for the $7, I would say maybe 30-minute high. I'm not rushing into anything. But I also think we can find better long setups like I've been talking about here for a few minutes. Here's one, TFX. And I posted this one actually last night to our subscribers. Yeah, I just need to tell them to hold off on all trades, and I'll go